So the first metric I look at to decide whether or not I want to research further into a stock is their sales growth estimate. And I want to see sales growth estimate be at least 15% because I'm a growth investor. And when we take a look at Boeing stock, we can see that their sales are expected to grow 31% in 2021. So today we're going to go over some of Boeing's numbers and key trends in the passenger demand. Before we get into the video, make sure to smash the like button and subscribe if you haven't done so already. With that being said, let's go ahead and get into it. As most of you know, Boeing is an aerospace company that manufactures airplanes, and if we take a look at their market cap, they currently have a market cap of $101 billion, which some investors will interpret as low because they'll compare it to a year ago when it was $204 billion and say, look, Boeing has half of its value. However, when we look at the forward PE, we can see that they have a forward PE of 44, which is way too high for a company like Boeing, especially when you compare it to the S&P 500's PE ratio of 27. You can see that Boeing is extremely overvalued. And Boeing usually has a PE ratio similar to the S&P 500, so Boeing, even though lost half of their value in terms of market cap, is still very overvalued on price to earnings basis. And a PE of 44 is something that you'd see for a growth stock, not a blue chip company like Boeing. Let's go ahead and take a look at future trend forecasts for passenger traffic outlook. So we can see that 2020 passenger traffic crashed harder than any time in recent history by far. And if you look at the future trend estimates in the dotted lines, you can see that it's going to take almost a decade to get back up to the 2019 levels. And if you were holding Boeing stock in 2019 and unfortunately held that position during the crash, I'd be selling my losses because there are so many better opportunities in the stock market than an aerospace manufacturing company, which is grossly overvalued and at the same time has been one of the hardest hit industries. If we look here at upgrades and downgrades, we can see that Bernstein downgraded Boeing from outperform to market perform, and we can also see that Berenberg downgraded Boeing from a hold to a sell. And taking a look at insider trading, we can see that there have been virtually zero buying from people inside the company, which shows a lack of confidence in their current stock price compared to their fundamentals. And if we take a look at their profit margins, we can see that it says like and subscribe for the YouTube algorithm. We can also see that Boeing is in the negative in both profit and operating margins, along with their return on assets. And if we take a look at their executive team, we can see that their executive team is rated a D+ by Comparably.com, and their executive team was placed in the bottom 25% of companies in the US. And it's important to note that Boeing has been having many major issues even before the shutdown, with their 737 MAX having major issues that didn't make it safe to fly and resulted in multiple plane crashes. And it's also extremely important to note that Boeing suppliers will be asked to make significantly fewer 737 MAX deliveries through 2022. When you take into account their overvalued PE ratio and their massive crash in passenger traffic outlook over the next decade, and downgrades from Bernstein and Berenberg, and their lack of insider buying, and their management team rating of a D+, it's clear that Boeing is a stock to stay away from unless there's a fundamental change in their growth strategy and a change in their management team. Thank you guys for watching the video. Let me know what you guys think down in the comment section below. Also, once again, make sure to click the like button and subscribe, and have a great day. Bye.